My mortgage company failed to pay my property taxes from escrow, and now I'm being fined for late fees. Not sure how to proceed. What a doozy. Now, before we dive in, just a quick reminder. This video is for informational and entertainment purposes only, and should not be considered financial advice. Our full disclaimer is shown here and on our website. Hello everyone, and welcome to another episode of Finance with Anthony. Today we're going to be going over some interesting topics, whether it ranges from credit cards to unique housing needs, as well as, scams out there. So, let's dive right into some awesome stories right now. Filed a credit card dispute and owner is calling. I bought shoes, returned them, and never received the refund. I had a tracking and shoes were delivered back to them. I called them, left message, sent emails, and never heard back. I ended up filing a dispute, and now the owner is calling and trying to make me feel bad about it and saying, I don't want to refund your money because what if you get refunded twice and then claim they don't have the shoes, and keeps going in circles saying he wishes I would have talked to them personally. Well, how could I? He's asking for proof of me calling and emailing them, which I do have, but do I even want to deal with this back and forth, or should I ignore and wait for the dispute to be finalized? So this is an amazing question. So let's do it from both perspectives. Let's do it from this perspective of the buyer now. So let's say this actually happens to you. You actually gave, the refund back. You actually returned the item back to the seller. And of course, you have proof that you returned the item and you still have not received your refund. The first thing you need to look at is what is the refund policy of that vendor. Sometimes it's not an immediate refund. It might take a couple of business days. That's fine. But if you notice that you haven't received the refund after a long period of time, then yeah, something is wrong. So this is a perfect time for you to actually call your credit card company and actually file a dispute, which will usually give you a provisional credit. This is usually a lot better to do than, for example, if you just wait on it and just try to get your refund, because your credit card company will fight for you and will try to get the refund back to you. Now, in terms of, getting a refund twice, that usually never happens. Usually the refund that you get from your credit card company is the only refund that you'll be getting, and then your credit card company will be fighting to effectively get the funds back from the seller. Now, on the seller side, if you actually, have a client where effectively they didn't refund you the item, or maybe something happened with the item, then you do have a legal right to actually claim the funds back from the customer. So there are a lot of cases where the seller might have been scammed, where they didn't get the item back really, and things of this nature. So you can actually, fight this and actually get the money or keep the money that you actually got from the sale. So a lot of things that can happen in this. So yeah, really interesting story overall. So let's dive right into the next one. What's the best credit card for me? This is a good one. Hi, I'm looking to open a credit card and want to know what would be best for me. I want something stable I can keep open for a long time. APR isn't too big of a concern for me at the moment, but I'm assuming I'll wish I look it into considering in a decade or so, LOL. Context, I'm freshly 22 and graduated from college. I have a debit card at a Fidelity Roth IRA with maybe $4,000 in it, and my only other card is a Student Discover card. I've had it for 3 years and don't plan on closing it. $0 annual fee and all. My credit score is around 775 right now and clean credit report. I'm about to move into a different part of the US in a couple of months for work and grad school, and looking for a new car, preferably with good cashback. I won't travel too much, and other than the occasional 4-hour plane back home, lean towards groceries than restaurants for the better part of the week. And I have no car/gas necessities. Anything else I should add that would be helpful? Grateful for any advice. Thanks. So, you're in luck. Now that you have a great credit score, there's a lot of options that are available to you. Now, in terms of getting the most cashback back, actually, I would recommend the Citi Double Cash card. Usually, they give you 2% on any transaction you have, and it's a very stable card that you can effectively use without using too much brain power, which is, I like to keep things simple myself, and that's usually the Citi Double Cash card. Now, another great option for you would actually be the Capital One Saver card. which is really great for restaurants and buying groceries. Usually you get 3% back on this stuff. So yeah, so you get 3% back on these categories. So overall, a really great card to use. And if you were planning to buy, actually use car or go to Costco, I would have recommended the Costco, the Costco card. Now, overall, there's a lot of great options out there. But since you're not planning to travel, I am not going to recommend a travel card. But once you do plan to travel, I would say you always need kind of like your go-to card, like your Citi Double Cash, one travel card, and then one card maybe uses for restaurants and groceries. So overall, lots of great options out there. And I just want to tell everyone that we actually have the top 10 credit cards of 2025. We have a video on that. So please look out please look out for a link below. And yeah, please check it out, everyone. So let's move on to the next story. My mortgage company failed to pay my property taxes from escrow, and now I'm being fined for late fees. Not sure how to proceed. What a doozy. I've been with the same mortgage company for a few years, and they have always paid my homeowner's insurance and property taxes from the escrow account. I have never been late or missed a payment. I received an email from the mortgage servicer saying that there was a surplus in my escrow account and I would be getting a refund check. That's kind of suspicious. When I went to my account to view the escrow statement, I saw that the check was for thousands of dollars and they did not pay my taxes in December like they always do. I went to the tax assessor's website and my taxes have not been paid. In addition, there are now hundreds of dollars in late fees. The escrow statement also shows my monthly payments being reduced starting in April. It looks like they will not be collected for my taxes at all in the future, which is very odd. Yeah, definitely very peculiar. If I do indeed get the check for that amount, I can pay the property taxes myself, but then I have to pay the late fees out of my own pocket. Is that right? I tried calling the tax department at the mortgage company on Friday, but no one picked up. I called again today and tried the regular escrow department, but they told me they can't help me and to call the tax department, which is closed. Well, that's a lot of back and forth. I will try the tax department again on Monday, but I'm starting to get stressed. Does anyone have any advice? So this is actually a very, very important thing. So usually an escrow, just to give everyone some context, an escrow is an account that your mortgage company opens up to pay all the necessary bills of your home, which is usually the insurance and the property tax, which are the two main ones that the escrow accounts are used for. Now, who's responsible for paying these property taxes and insurance? It is your mortgage company. Your mortgage company has to pay this on your behalf because they know that if you don't pay, for example, your property taxes, your property itself can actually be taken by the city after not paying taxes for a couple of years. The second thing is for the insurance. The reason they also have to pay the insurance, and it's important to have the insurance current for their own benefit, is because if the insurance is not active and there's something that happens, maybe there's like a fire, God forbid, or anything like that happens, then essentially they lose out on the asset that they gave you. So overall, this is why it's the mortgage company's best interest to not just pay the property taxes, but also pay the mortgage, the insurance of course, of the property. Now, who's liable in this case? In this case, it's the mortgage company. The mortgage company has to pay any interest or penalties for not paying your taxes on time because it is up to them to actually pay the taxes while you have a mortgage with them. So make sure that you have the mortgage company pay the taxes and any insurance or anything, any penalties, any interest, anything like that. It's got to be your mortgage company. So let's dive right into the next question.
Hello everyone, my name is Anthony and I'm the host of TheLostSanctuary. I hope you've been enjoying our content so far, and if you have, please feel free to like and subscribe. Also, we have our website up here, and we also have some socials down here, and as always, leave your comments down below.
Is it common for apartments to increase the rent during lease renewals? Hello! So this is my first year leasing ever, and today the front office gave me the option to sign a renewal for 2025 to 2026. I noticed that my rent went up for $100 per month. Is this normal in lease renewals? Edit, I'm a student and live with 3 other roommates, if that matters. This year they're charging me $700 a month. Sorry, this year they're charging me $700 per month, but for 2025 to 2026, it will go up to $800 per month. So this is a very important question. So it's very, very common for landlords to actually increase the rent of, most of their apartments. Usually on average, it's around 5% increase per year. However, there are some jurisdictions that actually don't have a cap. So essentially, they could actually increase your rent double if they wanted to. There's some jurisdictions they can do that. It's just based on the local jurisdictions and what their laws are. However, there are actually some jurisdictions that actually limit the amount of increase you can actually have in a certain area. For example, if you look at Jersey City or Bayonne, usually you can't charge more than, I believe, 4.35% more per year. So essentially, there is a cap on these areas, these higher end areas. But there are some areas, as I mentioned, that they could double your rent and there's nothing you can do about it. So in most cases, it's very common for, companies to actually increase your rent because of two things. The first thing is because everything goes up for them too. Property taxes, insurance, everything usually goes up for the landlord. And the second thing is, the reason they also increase your rent is because they do want a little bit more profitability maybe in the property. Maybe they're not making enough. So those are the two main reasons that a landlord would usually increase your rent. So let's dive right into the next scenario. Recession-proofing your portfolio. Just curious how others are recession-proofing their portfolio besides the obvious 4 to 6 months of expenses in liquid. Anyone doing anything else? Anyone reallocating / changing their portfolios? Personally, I haven't touched my investment strategy much, but instead I'm trying to increase my liquidity to 10 to 12 months with intention to buy my up assets at peak recession. Thoughts? So, this is a very, very important thing that I believe everyone should have. And if you have the ability to, of course. When you're recession-proof your portfolio, it's always important to remain as liquid as possible, at least in terms of having 6 to 12 months of an emergency fund. So once you have that, then you could think about what are your next moves. Do you maybe want to start saving a fund for like maybe buying a property? Do you actually want to go straight into like buying some ETFs on the S&P 500? All of these are viable options. The one thing I will say though is that depending on which strategy you do, make sure you stick with it. So for example, if you're planning to buy a home, then make sure you're stuffing that cash into that real estate fund, put it away as much as possible. So if something happens, like the interest rates go down, or there's a great deal that comes up, you buy that puppy. The second thing is, if you're actually going into the S&P 500 or ETF route, or even the stock route, the worst thing you can do is trying to time the market. If you try to time the market, it usually never works. In most cases, there's going to be a lot of dips in the market. There's going to be a lot of increases, but there's no perfect formula to actually predict when the dip is actually going to keep going down and then it's going to go up. It's almost impossible. Even people who are professionals who've been doing this for 30 to 50 years, it's impossible to do. So the best thing you can do for yourself is to buy all the time. Buy frequently, maybe buy every month or buy every week, whatever your frequency is. And just keep doing it. In the long run, you're going to be having some that are lower than others. And overall, it's going to balance out in terms of the gains. So in some cases, you're going to have some losses, you're going to have some gains. But overall, on average, the S&P 500 has yielded 8 to 12% of increases throughout the years, as long as you've continuously put money into this puppy. So this is overall great advice, and I hope everyone out there continues to recession-proof their portfolio and remember to diversify. So let's move on to the last one. Chase will soon block Zelle payments to sellers on social media. So it's probably like Facebook Marketplace and things like that. JP Morgan Chase Bank Chase will start blocking Zelle payments to social media contacts to combat significant rise in online scam utilizing the service for fraud. Zelle is a highly popular digital payment network that allows users to transfer money quickly and securely between bank accounts. It is also integrated into the mobile apps of many banks in the United States, allowing for almost instant transfers without requiring cash or checks, but lacking one crucial feature: purchase protection. In a recent update to its user policy, Chase explained that the payment service should not be used to buy goods from retailers or merchants, including on or through social media marketplaces or messaging apps. According to scam reports from Chase customers who filed Zelle or wire transfer claims between June and December 2024, almost 50% of all reported scams originated on social media. In response to these worrying statistics, the banks added that starting March 23rd, it will begin delaying, declining, or blocking Zelle payments to accounts if they're identified as originating from social media contact. For your protection, Chase will not allow you to send Zelle payments identified as originating from contacts through social media. We'll decline those transactions because Zelle is meant to pay friends, family, and other trusted recipients you know, not for those you meet on social media, the bank warned. We may request information from you, for example, when you set up a payment or add a recipient regarding your purpose of payment, the method of contact with your recipient, or other details we deem appropriate to assess whether your payment has elevated fraud or scam risk, or is illegal, ineligible, or improper payment. Change likely prompted by CFPB lawsuit. While Chase didn't share exactly what exactly prompted this decision, the U.S. Consumer Finance Protection Bureau, CFPB, issued early warning services as Zelle operated and 3 weeks of its owner banks, Bank of America, JP Morgan Chase, and Wells Fargo in December for rushing the service into the market to compete with other payment platforms like Venmo and Cash App, and failing to implement adequate consumer safeguards. According to CFPB's lawsuit, this resulted in hundreds of thousands of Zelle and bank customers losing over $870 million since the payment services was launched. The affected consumers are also denied assistance and told to contact the scammers to recover the money, while the banks failed to investigate their complaints and provide them with legally required reimbursement for errors and fraud. The nation's largest bank felt threatened by competing payment apps, so they rushed to put out Zelle, said CFPB Director Rohit Chopra. By their failing to put in proper safeguards, Zelle became a goldmine for fraudsters while often leaving victims to fend for themselves. Wow. So this is a very, very interesting story right here. So I'll tell you like, funny enough, a personal story of my own. So I used to have contractors who I would pay through Zelle. In most cases, I believe the contractor did the work, and that once I sent them funds, that it was because of the work was completed. Now, that was probably the biggest mistake I've ever made in my life. Zelle is something where once you actually get that money actually goes out, it's almost impossible for you to recoup it back, especially if it's due to fraud or other items. Usually they'll make you file like a lawsuit against the person or try to reclaim the money back, and it's almost impossible. The bank will not actually help you in any regard to try to get the money back. It's effectively like, it's kind of like the cash has flown away and you can't get it back. So it's important to understand that Zelle is as good as you handing someone like $20 in their hand. Once the $20 is in their hand, it's theirs. Unless they decide to be a good Samaritan and actually give that back to you. So I understand why these new laws are being implemented, because there is no safeguards, no purchase protection on Zelle. It's effectively cash. So it's not like when you have credit cards, which has great protections. So essentially, once you swipe your credit card, there is ways to dispute the charge. There's ways to get your funds back. But once it's a debit card or actually a Zelle payment, it's a lot more difficult. It becomes so hard to get your money back, and overall, not a good experience. So hopefully all of these stories today, helped you, learn something new. And I hope everyone out there has a blessed day. This has been Finance with Anthony, episode 12. Alrighty, adios. Keep doing what you're doing. You're doing an amazing job, and I'm wishing everyone out there all the best. Alright, until next time, adios.